Most people think that to build a world-class credit score, you need to dance with debt. They believe you have to carry a balance, pay interest, or take out loans just to prove you're a responsible borrower. That is the single biggest lie in personal finance. In fact, it is the exact opposite of how the game is actually played. If you're paying interest to build credit, you're not winning, you are being exploited. The credit system in the United States is essentially a giant machine designed to measure your reliability. It does not care how much interest you pay. It does not care how much you struggle. It only cares about a few specific data points that prove you are a low-risk individual who pays back what they borrow on time and manages their limits with surgical precision. You can achieve an elite credit score without ever paying a single penny in interest. And you can do it without ever falling into the debt trap that keeps millions of Americans stuck in a cycle of poverty. Let us start with the most misunderstood concept in the entire financial world, which is credit utilization. Think of your credit limit as a boundary you've been trusted with. If you have a $10,000 limit and you use $9,000 of it every month, the algorithms do not see a responsible user. They see someone who is overextended, someone who is living on the edge of their means, and someone who might be one emergency away from a financial collapse. This lowers your score. The golden rule here is to keep your utilization under 10%, not 30, not 40, 10. If your limit is $10,000, your balance should never report higher than $1,000. Ideally, you want it to be even lower. But there is a secret layer to this that most people never figure out. Your credit card issuer does not necessarily report your balance on your due date. They report it on your statement closing date. This is the date the billing cycle ends. If you pay your bill on the due date, that's great for your wallet, but it might be too late for your credit score. If you want to master this, you need to check your statement closing date and pay your balance in full 3 days before that date. When the bank reports your data to the credit bureaus, your balance will show as zero. Even if you've been spending heavily throughout the month, your utilization will appear as 0%. This is the single fastest way to manipulate your score upward without actually changing your spending habits. Now let's talk about the age of your credit accounts. This is the silent killer of credit scores. Many people open a credit card, use it for a few years, and then close it when they get a new card with better rewards. That is a massive mistake. Your credit history is a long-form story about your life. When you close an account, you are essentially deleting chapters from that story. You are shortening your average age of accounts. If you have a credit card that you have held for 10 years, that card is the anchor of your entire financial profile. Even if it's not the best card in your wallet, you should keep it open. If it has no annual fee, put a small recurring subscription on it like a streaming service and set it to autopay. This keeps the account active and prevents the bank from closing it for inactivity. You are essentially paying for a service you already use, but you are using that transaction to build years of stable history that lenders will look at for decades to come. But what if you're starting from zero? What if you have no history to speak of? This is where the authorized user hack comes in. If you have a parent, a spouse, or a sibling who has a credit card with a perfect payment history and a long track record, ask them to add you as an authorized user. You don't even need to carry their card. You don't need to make a single purchase. The moment they add you to that account, the history of that card, all those years of on-time payments and low utilization, gets copied onto your credit report. It's like inheriting a reputation you haven't earned yet. It's completely legal, and it's standard practice in the banking world. It's the fastest way to turn a thin credit file into a respectable one in less than 30 days. You must also learn to be a detective about your own report. Credit bureaus are not infallible. They make mistakes constantly. They mix up names, they misreport payment dates, and sometimes include accounts that belong to someone else entirely. You are entitled to a free credit report from every major bureau once a year. Go to the official websites and download them. Look at every single line. If you see a late payment from 3 years ago that you know you paid on time, or an account you never opened, don't ignore it. File a dispute. You have the right to challenge any information you believe is inaccurate. If the bureau cannot verify the information, they are legally required to remove it. I have seen individuals jump 50 points in a single month just by finding and removing one incorrect late payment mark. There is also the concept of credit diversity. The system wants to see that you can handle different types of debt, even if you're not using them. It likes to see that you have a credit card, maybe a retail card, or perhaps a history of a student loan or an auto loan. Now, don't go out and take out loans you don't need. That's the trap. But recognize that if you have never had anything other than a single credit card, your score will eventually hit a ceiling. This is not something to rush. This is a long-term strategy. Focus on the basics first, the utilization and the payment history, and let the diversity come naturally over the years. Many people are terrified of the word credit. They view it as a burden or a sign of being broke. But if you have the cash to pay for what you buy, credit becomes a tool, not a debt. If you buy groceries with a credit card and pay the balance in full every single month, you are using the bank's money to make your purchases, you are earning rewards points, and you are building a profile that will eventually allow you to buy a home or a business at a lower interest rate than someone who pays with cash. That's the difference between being a consumer and being a financial strategist. The consumer pays cash and has no history. The strategist uses the system to build an asset, their credit score, without ever paying a single cent in interest. Never forget that your credit score is the key to your future leverage. When you're ready to make a major move, when you want to launch a business, invest in real estate, or move into a new market, the banks will not ask you for your character. They will not ask you for your dreams. They will look at that 3-digit number. If that number is high, the doors to capital will swing open for you. You'll get the best rates, the lowest fees, and the easiest approvals. If that number is low, you will spend your life paying higher interest rates than everyone else, essentially paying a penalty for every single dollar you borrow. That penalty adds up to tens of thousands, sometimes hundreds of thousands of dollars over a lifetime. That's the cost of not understanding how this system works. Stop looking at your credit score as a reflection of your worth. It's a reflection of your management. It's a game of patience, rules, and small, consistent actions. It's about paying your bills before they're due, keeping your utilization invisible, and protecting the length of your history like it's your most valuable asset. Don't let the marketing emails from credit card companies fool you into thinking you need more debt. Don't let the flashy rewards programs convince you to spend money you don't have. Keep your life simple, keep your balances low, and keep your history long. If you can master these 3 habits, you will have a credit score that makes you virtually invincible in the eyes of any lender. You are building the foundation for every financial move you will make for the rest of your life. Start today. Audit your reports, set your payment dates, and protect your profile. This is how you win.